All right, we're gonna let her rip. Can you hear me
All
okay?
right.
Okay. All right. Hey everyone, Josh Null here with Gulf Coast Financial Advisors. We're coming to you again this morning with a update on real estate, investment properties, real estate down on the Gulf Coast of Alabama, lower Alabama. I'm joined, as always, by our local expert, Brian Harris. Brian is the broker and CEO of Harris Vacation Rentals and Harris Realty Group. Brian, how you doing?
We are good over here. I'm actually down with my family on the open beaches in Alabama, so having a great time. The water's a little rough today. I don't know if y'all can see that back there, but the beaches are white as always. Sun's out, and we're having a great time down here.
Now, so that's not a fake backdrop behind you. That's a real deal.
That is not a virtual backdrop, as everybody's doing their Zoom virtual backdrops. It's right there. We're out in the Fort Morgan area of Gulf Shores, so hopefully you can see me and the coastline there.
Well, it looks great. Well, for those that are just joining this the first time, we're going to walk through some statistics and updates on what's going on specifically to real estate along Alabama's Gulf Coast and also the panhandle of Florida, just right across the state line. For those of y'all that are have done this before, then you know that we've got quite a detailed spreadsheet that we're going to go through pretty quickly, and we're also going to have questions in real time. We also record this and send it out later, so as Brian and I have seen, a lot of times people will have questions after the fact. That's totally fine. Brian, before I turn it over to you and the screen share, I do want to know a couple things that I've been hearing from my clients and my network around this area, because as you and I have discussed and we've laid out on these webinars before, I am a financial advisor by trade. I am not a realtor or a real estate broker or anything like that, but just by sheer fact of where my practice is located, the majority of my clients have some of their portfolio in real estate. So I think there's been a surprisingly aggressive demand for things. And I think we have the tale of two cities, or the tale of two states. I definitely want to see if I can ask you to compare and contrast what's going on with Alabama coastal market versus the Florida coastal market. So with that said, I'm going to turn it over to you.
Yeah, and for those of y'all that have been with us and seen some of the other episodes, this is, I think, our third or fourth market update. A couple weeks back, we said that April was the tale of 2 months on the booking side. And, now I think, like you said, we kind of have the tale of two states, with Alabama and Florida having very different procedures right now for vacation rentals. And it's specifically, second homeowner, the quintessential traditional VRBO, Airbnb, home away style, condo owner or homeowner that's renting their, property out. Those are open and ready for business in Alabama, and those remain closed in Florida. The head scratcher in Florida is that the hotel industry and the timeshare industry are fully open. And, I'm talking to people over in Florida that do what I do, and they can't, they're scratching their heads. They don't understand how, a standalone home is different from a hotel when accepting guests. So that remains to be kind of up for debate on that side. What I wanted to touch on as we go through is we'll have a market update really quick on the Alabama side. We really just have some tidbits from realtors over in the Florida Panhandle. I don't have market data there. That might be something that we try to get together for everybody later on. But I wanted to start to kind of compare the two states and the reaction. So we'll dig into all that. Josh, I'm going to share my screen. You just kind of pop back in here when you have a question or want to, more clarity on something.
Well, and I think this is really important stuff, because quite honestly, when we first started doing this, Alabama and Florida were kind of on the same footing when it came to how investors were going to be able to rent their properties out. In my opinion, again, and I know we're going to jump in this a little bit more, but it seems like they've gone kind of two different directions, and you can physically see it when you go down there. I mean, there's a noticeable difference in activity levels. So I'm really curious to see what the numbers say to what my eyes are telling me.
Yeah, absolutely. So let's jump into it real quick. So I'm going to share my screen. You tell me if you've got it here.
Yes, perfect.
This presentation. Okay. We still good?
Perfect.
All right, here we go. So again, as Josh said, I'm Brian Harris, Harris Realty Group, Harris Vacation Rentals. We are a full service real estate brokers down here in Gulf Shores. We manage about 120 vacation rental properties. And we also assist people on the investment side or selling their property down here. Here's our contact info, and we'll put all this in the show notes as well. Just a quick overview. We're gonna really dig into the data in Alabama because I have access to it. I'm not a broker in Florida, so we had to actually reach out to some Florida agents for info on that side. But I did want to kind of start to bring the Florida market into the fold, so to speak, because it's such a big market down here, and it's so contrast to what we're doing on the Alabama side. So we'll talk about both of those real estate markets. We'll talk about the current vacation market. We're seeing really huge demand for that. And then we have some action items. What do you need to do with this information? That's the biggest thing. Hearing it's great, understanding it's even better, but what do you need to do as an owner or a potential investor? And we'll talk about those action items at the end here. Just to jump right in, new listings. And these are weekly trends, okay, going back into kind of late March as this kind of all hit and started to disrupt or catalyze the real estate market in some way. We're seeing an upward trend in new listings. Last week being the biggest upswing in new listings hitting the market. And this is the coastal Alabama Baldwin County market. So this is Gulf Shores and Orange Beach specifically. So that's where we're aiming all of our data today. So an uptick in new listings. And this is kind of going into what we've predicted. We've predicted that we're going to have all along price pressure. We're going to see people get aggressive on price. And we're going to see, properties hit the market that maybe wouldn't have hit the market without the pressure from COVID-19, the massive unemployment that we're seeing in Alabama, basically an elimination of the March and April, which is a big spring break revenue producer. So we saw that kind of basically get erased, which puts a lot of pressure on people. All right, closings. Spoiler alert, this is the only graph that's showing a negative trend. Okay, this was actual closings that were recorded week of May 1st. So this is last week's data that we're going over. You can see from the chart we had an upward trend in closings. Last week we took a little bit of a step back. So we'll have to kind of monitor that and see if that trend continues. And my prediction is that it won't continue. And we're going to go over why in the next slide. Pending and under contract deals. Okay, so these are listings that have been on the market and now they are going, under contract. A buyer has made an offer negotiation. Now that contract is pending and it's going to the closing process, which can take several weeks, as we all know. We're seeing just a stair-step trend up with contracts going or listings going under contract. Now, what does that tell us? That tells us, like we've been saying before, we've got a very aggressive market, but we've got a good market. We have a healthy market. We have a market where buyers are coming in and making transactions happen, and sellers are reducing prices and making deals happen on their side. So that's a really, really good sign. If this was a downward trend, if this was going down, that would be really scary. That's what we had back in 2008 when you could price it as low as you wanted and nobody was buying it. So that's not what we have right now. We have an aggressive market, but we have a good market. All right, next slide. This is price changes. Okay, so these are listings that are on the market. It just lists price change, but I'm assuming most of these are price reductions. But we've seen an increase in price reductions over the weeks that we've been looking at. Really, basically, about 3-4 weeks ago in mid-April, we saw the market as a whole get more aggressive. More people that have listings are trying to get them sold, trying to get them under contract. They're moving these prices down. And these price reductions are cumulative. Okay, so we had a little over 60 in that 417 week, followed by, let's call that 50, followed by, right at 60 again. So those are, stacking on top of each other. People are getting more and more aggressive. So more listings are having lower prices, or people are doing multiple lowering of prices. So this slide and the slide, this is going back to pending under contract. These are the two that are telling me that the market's getting aggressive. And I think that's the bet. When people ask me, what's the market like? Aggressive seems to be the best adjective descriptor word for what we're seeing here. People that want to sell really want to sell. People that are ready to buy are really ready to buy, and they're making things happen. So we'll talk about action items here in a second. Okay, summary. I don't know if you can see that, but that's summary over here. Anyway, summary and action items. Again, aggressive market. We're seeing an increase in price reductions. We're seeing an increase in properties going pending or under contract. We're seeing an increase in new listings. Josh, do you have something? Josh, do you have a question? You're on mute.
Brian, go back one slide.
Yep.
And then one more slide. What's amazing is we saw, literally a to the day pivot that if someone goes back and listens to our first webinar, you had mentioned back when we started doing this late March, that there's, at least in your eyes, you thought there was going to be a pretty aggressive price adjusting, and that if that was followed by things going pending under contract and then potentially, as they go to closing, then that was a sign that the market was adjusting correctly and moving quickly to do so. It's kind of amazing how that's been playing out. I mean, if you look at this one and then I'm sorry, go forward now one slide.
Yeah.
What you're seeing is, like you said, people are aggressively adjusting their price. The market, as far as from the numbers standpoint, appears to be operating in an efficient manner, in that we know this area is attractive to buyers. We know this area is attractive to investors. What we're seeing probably was people on the sideline waiting to make their move. And as soon as those prices adjusted a little, it looks like they jumped. Am I reading those numbers correctly?
Yeah, that's what the numbers are telling us. And that's the key thing to remember, is that, the market's healthy. The market's just more aggressive than it was 6 months ago. And the reason it's more aggressive is there's more catalyst in making things happen. On the buyer side, they, like you said, they've probably been looking for 6, 12, 18 months. And now they're seeing, they've been watching prices climb, and now they're seeing some deals actually come into kind of their wheelhouse, and they can make that transaction happen. Another thing, and we'll talk a little bit more about this, is the interest rates are really low. So financing is a really good deal right now. So that's also helping. And that's all, based on what the Fed's doing and pumping money into the economy. So that's helping. Whereas if they hadn't done that, we'd see that more 2008-esque, where we've got, a lot of price reductions, but we're not seeing anything go under contract because nobody's wanting to buy those properties. So this is good news. And you just let me know when you've got another one, Josh. Okay, so aggressive market. I think that's the best word for it right now. Action items. If you're an owner and you're not in distress, I would say it's still worth a call to, and I always say, if you've got a realtor, like you would say you've got a doctor or you've got an accountant, call them. Ask them what the market's like. Ask them what the valuation would be, for your property. A good agent can do this in about 10, 15 minutes. It doesn't have to be super fancy. You're not asking them to go, run all over the place for you. But get a sense of where the market value is, especially if you hadn't really dug into it in a few years. The other thing I would say is if you're a current owner, it might be a good chance if you've considered upgrading your property. We had a client that had been in a property that they just weren't quite happy with. And I won't get into all the details about what was making that an issue, but we had been talking for 2 or 3 years about, hey, why don't you find an upgrade? You could sell the one you've got, you can 1031 exchange, and we can get into that later on. In real quick terms, that's basically where you can sell a property and not pay tax on the capital gain, the profit that you made off of that property. And our brokerage helps people do that all the time. So if you're interested in upgrading, that might be a really good option for you. So she was able to find an upgraded property that she could purchase with the interest rates being as low as they are, basically maintain the same payment, and is now selling the property that she had. So it's really going to be a win-win, I think, for everybody. So, this may be a good time to upgrade a property if you've ever considered that. Sellers. If you're looking to sell, you can, okay? Don't let your listing agent say that there's nobody out here to buy. There are people looking to buy. There are people closing transactions and making listings go pending under contract. There are buyers in our market, but you got to get aggressive. We got to get aggressive with that price if we're going to move it. If you're a seller and you're distressed, we really just have to double down on that price. That's what's going to move the needle in this market. It's really going to come down to a more financially driven market right now. So if you're in distress, go ahead and and what we've been saying from, really kind of late March is that we're going to have a trickle of price reductions, which we're seeing. If we go back a couple of slides, price changes. We said late March that in the next 2 to 10 weeks, we're going to have a trickle of price reductions. And that's what we're seeing play out. My other prediction at that time, and still is my prediction, the 2 to 10 week period, we're going to see price reductions. The 2 to 10 month period, we're going to see a real massive increase in listings because the massive unemployment is going to catch up with people. And they're going to say, hey, look, I don't need a second home. I don't need this investment property. I want to clean the balance sheet off because the cash flow is not, working as well. So that's what we're seeing. Buyers, investors, what are your action items? If you're serious about looking and buying, you've got to be ready. The good deals, and we're seeing these price drops happen, and they're going under contract. So if it's a good deal, it's going under contract quickly. And you've got to be quicker than the next guy because somebody's out there hunting just like you're hunting, and we've got to be ready to go. So that means getting your financing set up. That means going ahead and talking to, getting pre-approved, and we can help with that process, but being ready to go and being willing to put an offer in and go under contract maybe before you even come down and see it. And we have that happen all the time. And then you come down, make sure, kick the tires, in person and make sure it's something that you want, or, close remotely. We have people that, close and they'll never even see the property. So we can facilitate any of those options for you with the technology that we have with video chats and video messaging and that sort of thing. So the biggest thing for buyers and investors is you got to be ready to act quickly. Okay, this is a special section. I don't have the data. Everything else on the slides that you just saw was data driven. We're actually going and looking at the data in the MLS to build those slides out. For the Florida market, this is, a special section. I reached out to a broker owner, Michelle Sexton at Paradise 30A, and she does basically what I'm doing. She's the broker of a real estate sales brokerage and a vacation rental management company. So here are some quotes that she sent me about the market. We're not allowed to rent, so that is hurting a lot of people. And what she's saying there is that's hurting owners that aren't allowed to produce any revenue from their properties. Financially speaking, I'm speaking for Michelle now. I have really strong owners, but if we still cannot rent after Memorial Day, I think I will start to see some waiver financially. Okay. So what she's saying there is people are stable right now, but if this continues longer, they may not be able to hold on to this, and may, those content owners are going to turn into listings trying to get rid of that property. And then finally, Michelle said, we are seeing owners list their homes due to COVID. And that's basically what she's saying is due to the virus, due to everything that's happening, whether it's a personal job loss or just stress, they're putting their properties on, just kind of cleaning out the cupboard of life and the cupboard of the balance sheet personally there. Josh, did you have something on this one?
I do, Brian. Let's, so first we have people that are watching this video, this webinar, both in real time and they watch it later that maybe have not been down here, but are interested in an area. So just a very quick description, the Gulf Coast of Alabama, how many miles of beaches is that technically, Brian? Is that?
Oh God, put me on the spot here. I think 30 something.
Yeah, I think it's
go
32. 32.
Be vague.
Yeah. Anyway, the point of that being is that as you come out of Mobile Bay on the eastern shore and you run east, you've got 30 some miles of Alabama beaches, and then you hit the Florida line. You hit the very tip of the
right, just past Orange Beach. Yes.
Orange Beach, excuse me. Yeah, at the end of Orange Beach, the Florida Panhandle. And it's one of those things where I spent many of my years in Kansas City. I was on the border between Missouri and Kansas. And the reason I bring that up is some of these events hit the area. The reaction and the approach of the two different states, sometimes it's like you go into a different world when you cross that state line.
Right.
So what I'd like to do,
right.
Brian, very quickly is, tell us briefly, what has Alabama allowed their investors to do specifically that Florida has not, and what's been that impact, and what do we see with that going forward?
So the biggest difference is the owner of a condo or home in Alabama can legally rent their property, as they always have and intended to do when they bought it. And in Florida, that same owner cannot legally rent their property to a short-term vacation or guest.
Wow.
The biggest frustration that a lot of people have, and is actually being litigated currently, is that the hotel industry in Florida is actually open and thriving because all their competition, these condos and these private homes, are not allowed to rent. So it's just a head scratcher, and I'm glad I'm not in the middle of that legal battle. But the biggest thing for us is that we've been allowed to start renting again, and we're seeing, as we predicted, but actually even more than we predicted, we're seeing an increase in bookings. We're actually at fuller capacity this year than we were last year in May.
Well, you have some numbers
and coming.
Too, don't you?
What's that?
You have numbers specific to Harris.
Yeah, we'll jump into that real quick here. So
fascinating. I mean, look at that.
Yeah. So this chart is looking at the orange line here is the general Alabama vacation rental market. Okay. And we've got the months January to December. And this pink arrow, if everybody can see that pink arrow, that's what I'm calling the COVID-19 dip. Everything kind of second half of March, basically all of April was just kind of wiped out. I mean, the market went down to 3% occupancy for April, and that's just completely unheard of. The blue line is Harris Properties. And you can see that we trend right along with the general market. Now, we've been able to maintain more occupancy than the market has, and that's just really because we're kind of laser focused on the properties that we have. We've never really wanted to grow too big, so we can really focus on the owners that we have. So we've been able to maintain more occupancy, but even we were affected, really greatly. Oh, sorry, we've got a phone call there. Josh, you got me back?
Yes, you're good.
All right.
Somebody looking for a condo, probably.
Somebody's looking to book. Yeah. So we're seeing the same trend as the market. What we've seen is this huge spike coming out of the April dip into May. In May, we're at 68%, which is we're even more booked even halfway through May than we were last year in May. So we've just seen a huge increase in demand. What's making that? Let's see. What's making that happen? Really just a pent-up demand for travel, just getting out of the house. And we've been kind of saying that once it came back, it was going to really come back strong. We were spot on with that prediction. We probably even under-predicted how much demand there was going to be. Another thing is there's a reduction in outside restrictions. And what I mean outside restrictions, I don't mean legal restrictions, but I mean like school years and work schedules. Now everybody's kind of in this, work from home, homeschool. You can kind of, anywhere you have a Wi-Fi connection, you can make this happen. We just had a, societal reduction in restrictions to travel to this area. All right, so this chart, and I don't really have a lot of properties in Florida, so this is just, but I do have access to the Escambia County occupancy numbers, okay? So as the last slide, we looked at Baldwin County, okay, to give us the market. Now we're looking at Escambia County. This includes Pensacola over in the Florida area. I don't have the full panhandle, but we do have a little bit of Florida just to give us a sample of the contrast. So you can see we have the same COVID dip, okay? April's basically nothing, 10%. But where Alabama has now gone in May to 68%, Escambia County is still at 20%. So just a massively different, and by the end of the May, we could see that 4X Escambia County if they're still under rental restrictions. So just a massive upswing for Alabama and Escambia County. And I would assume the rest of the panhandle of Florida is still just unable to fill in because they're under a legal restriction not to. And then you can see June and July, this little hump here. I'll look at that. So we're contrasting a basically 39% occupancy in Escambia County to 58 for June in Baldwin County. So you can see that how much higher we are on ours than Florida is. And I think that's going to put even more pressure, like we just talked about, put more pressure on the Florida owner, and you might see a lot of deals over there in Florida. So whether you're looking at the Alabama coast as a buyer investor or the Florida coast, I think you're going to find deals in both markets. All right, let's see. This I wanted to show. This is just a snapshot of May. Okay, so this is showing May in its current form, okay, comparing 2020, that's the solid line, to 2019, okay? So May 2020 compared to 2019, you can see this first week right here, this yellow arrow is showing that the first week we were actually under May from last year. But we hit even in the second week, and then we hit, above and significantly above for basically the rest of the time. And we're still making bookings, but we are getting very limited on the inventory that we have. And then we've actually even got more bookings for Hangout Fest. This first kind of cylinder here that's shaded is Hangout Fest. And that what we did there is we showed that the Hangout Fest was canceled this year. But even with that cancellation, we actually have more bookings, more occupancy than we did last year. And then this next little cylinder is Memorial Day. Got a little bit cut off there, but you can see just a massive demand for, mid and late May in our market. Okay, just to sum it up, on the vacation side, really huge demand. In our industry, last minute is 2 weeks out. And we're seeing stuff for like, I want to come tonight. I want to come tomorrow night. I want to come Thursday, and it's Monday. So we're calling that ultra last minute bookings. And that's kind of uncommon for our market, more of a hotel trend that we're seeing. Alabama beaches are rebounding very strongly. Florida beaches remain closed to short-term vacation rentals. And obviously with that restriction can't rebound. Action items. What do you do with this information? If you own a rental, you want to make sure that your rental and your company is keeping pace with the market. We know that we're way ahead of the market. So we know that there are companies and property owners that they're not seeing the same results that our owners are seeing. So if you're an owner and you're not in the Harris program, you want to be that squeaky wheel. You want to be calling, what's my unit doing? How can we get more, occupancy? The demand is there. Don't let them tell you that the demand's not there. The demand is out of the roof. So you've got to be the squeaky wheel if you want to get those bookings into your property. If you still see it lagging, you may want to consider an alternate management situation, whether it's your management, you're not able to do it for whatever reason, work, kids are at home, you can't put the attention that you need to, or it's just getting frustrating. Or if your management company just doesn't seem to be keeping pace with the market, it may be time to kind of look at, what options are out there. So we're always open to that for the right properties. Action items. Let's see, where are we? Alabama owners. What I wrote here is we're out of the woods for now. Okay, and I really want to kind of put brackets and stars and highlight that for now, situation. We don't know where this is going. We never have. We don't know if there's going to be a second spike. I'm not a medical professional. I'm not a statistician. I don't know. For now, we're seeing in our market, as far as, vacation rentals and investments, it kind of looks like we're out of the woods. Okay. But if there's a second spike, if there's another beach closure, if there's more travel restrictions, obviously we're going to be back where we were, 4-8 weeks ago with reduced revenue. Florida, if you're an owner in Florida, you just got to continue to look at the numbers. Just like Michelle said, some of her owners, if they go past Memorial Day, they still can't book. They may start to get squeezed on that. But you just really want to make sure that you're being objective. You're looking at the numbers as they are. I think it was Jack Welch in his book, he wanted to always see reality as it was, not as he wanted it to be. And I think that's a great statement for right now. Like, you want to look at the numbers, look at your personal balance sheet and see it as the reality of it is. And then also understand that none of this was your fault. An investment that was a great idea, 24 months ago, 12 months ago, 6 months ago, 2 months ago, now may not look that great because we're in a completely different world. So we just have to look at it in its current environment. And if you do see that you've got some struggle there, you got to take action. You got to find an agent, a professional to help you take action on that. If that means selling, then sell. If that means getting revenue from managing something you didn't used to rent, do that. But make sure you're connecting with a good agent.
Very
Josh?
Good. Brian, on that note, I think what is amazing, and this is coming from somebody that has been in and around real estate pretty much my entire life, on the construction side when I was younger, and then as I came out of college was on the investment side. I got into real estate really before technology was a real driver of that. I mean, I can still remember, I go back far enough to remember when MLS kind of went officially online, believe it or not, right?
Yeah.
So the point of that is,
You're way older than me.
just tremendously. I'm way older than my wife too. That's what we go by. But the point of that, Brian, is, historically, real estate from an investment standpoint, historically, you've always been concerned about a couple things. One is liquidity, prices drop, and two, on your rental properties, is the ability to get in front of qualified people that can actually rent the properties, either short-term, mid-term, or long-term. Well, I think what you're seeing here with the numbers you're showing, I honestly, it would have been so fascinating, Brian, if you could have had these exact same numbers from 2008, or maybe even from Katrina, or from a hurricane, and
Right.
compare and contrast the immediacy of what you're seeing both on the buy-sell side when the proper adjustments are made, and then on the rental side when things open up. Literally, these things that we're doing about every 2 weeks, I can almost see through the numbers you're providing, where you can see the day that something was actually allowed to happen, right? It's that,
absolutely.
and that's a testament on the technology side. Just technology helps with the passing of information so that people can make informed and quick decisions. On the flip side,
and beyond that, we can actually dig into the numbers and see spikes in our bookings when Florida makes an announcement.
Right.
When Florida makes an announcement that they're extending, our sales that day spike because, people were kind of waiting, because they are always going to, and I think that in our market, we're actually going to probably gain some visitors long-term that find our market because they've always gone to Panama City, or they've always gone to Mexico Beach, or they've always gone to Destin, and now they can't. And now they're going to find, Gulf Shores and Orange Beach and Fort Morgan. And they're probably, some of those are not going to go back. So
I totally agree. And I think on the other side of the coin, I think your compare and contrast of your booking ratios versus the average is a great point to where, I deal with this in my line of work. Well, what value do I bring to the table, right?
Right.
Now, you can look at value simply on the upside. For example, I make you more interest rate percentage growth than just doing it on your own. That's fine.
Sure.
That's wonderful. But a lot of the value is what kind of support and numbers can you provide me when things go the opposite direction? What can you do for me when all of a sudden we go from a robust opportunity to rent properties very easily to, for a short time period anyway, where it was scratch and claw to get anything done. You can, from your numbers, where I think this sounds like I'm trying to sell your company. I'm just selling high quality professional guidance in this time period, because what you're actually seeing in the numbers is the value.
Yeah. And honestly, whether it's, us in Gulf Shores or Michelle over in 30A, or there's several agents over in 30A that are just top notch. And there's several property management companies in my market, our market, Gulf Shores, that are really top notch. You just want to make sure that you're getting a professional, and there's tremendous real estate agents in our market. And it's not like you have to go with a Harris agent. You just need to find an agent that you trust that's going to be professional, because these decisions, especially right now, everything's kind of leveraged and elevated. If we don't, jump out of the gate with a great listing and get this thing priced right, and it sits, that might put you in a bad position, might put your family in a bad position. So you want to make sure you're working with somebody that's professional on the sales side, on the management side, just like people, Josh, that come to you looking for professional advice on the real estate, or the financial side. That's just key. It's just working with a professional that's going to look out for you.
I have one last question on that regard,
Sure.
Brian. For the folks that are watching this webinar, the folks that have been paying attention to what we're putting out here, that are looking at getting into the investment property world, or have already been in it and they were doing it themselves. Now, I'm going to assume, just from a guy looking at it from a distance at this point, that a lot of the do-it-yourselfers were relying on online platforms like Airbnb to stay booked, right? It's almost an identical compare to the folks that would do it themselves in my world. They would have access to Schwab and Fidelity and TD Ameritrade just like anyone else. The difference would be, is there somebody there beside you? Is there not? not making a judgment on that. My point of this is, if someone is a do-it-yourselfer that has experience with the online platforms or is looking to come into as an investment property manager, can you, my last question for you is, can you kind of lay out how Harris Vacation Rentals works with those online platforms to help those people, help those investors lease their properties? Because I think a lot of times people, the average, you know, you and I are so knee deep in this stuff. A lot of times people think when you bring on a company like this, you automatically sever that ability to go directly to the client. I don't think that's necessarily true. So could you walk through that real quick as we wrap this up?
Yeah. So just real quick, if somebody has a property and they're managing it themselves, they're using an online booking service, VRBO, HomeAway, Airbnb. We utilize those marketing channels as well. I think the biggest contrast is the amount of time and expertise that we're bringing to it. I mean, Rachel is our revenue manager, and she's looking at rates every day. She's looking at occupancy every day. You know, we've now gotten to a point where, you know, we're starting to talk about pushing rates up. She saw a trend in August that brought us to a decision to make an adjustments in our rate structure and our nightly minimum structure for a week in August. And we've seen that spike in rentals in the last 2 weeks since that change was made. So I think it's really just a sense of how much expertise are you bringing, and how much time do you as an individual property owner with life still going on around you to focus on this. And it's just like probably Josh in your business, you probably work with a lot of people that are super sharp and super smart, but they may not have, you know, 4 hours a day to read the news and to make decisions. And, you know, that's why you're paying for the service. And the thing about paying for the service is you're paying for value. Okay. Are we bringing a positive value? Are you getting a positive return on what you're spending? And if you are, you're better off with a professional. Just like an electrician. If I wanted to rewire a room, you know, it would take me, I'd have to go learn the trade before I can do it. You know, it would take me years to really do that and do it safely. An electrician that already knows what he's doing, it takes him an hour and a half. So it's really just about the expertise and about making sure you're getting value for your investment.
Yeah, and I would burn the house down too if I did that. So,
yeah, I mean, we will spend 2 years and we burn it down. So.
That's right. All right. So on that note, I want to thank you all that have joined us. Again, I'm Josh Null with Gulf Coast Financial Advisors. You've been listening to Brian Harris. He is the broker and CEO of Harris Vacation Rentals and Harris Realty Group. And as you all can tell, especially first-time listeners, tons of great information to provide. Really has a buttoned-up organization that can help people quite a bit that are looking in these type of properties. Brian, if you'll pardon me real quick, I need to read my disclosure before we close. Advisory services offered through Prime Capital Investment Advisors, a federally registered investment advisor. The preceding commentary are the opinions of Josh Null and Brian Harris, and are not necessarily the opinions of Prime Capital. They were for informational and educational purposes only. They are not and should not be considered investment advice. Past performance is no guarantee of future results, no guarantees expressed or implied. If you need professional tax guidance, please seek a tax professional like a CPA. All right, Brian. On that note, man, this is fantastic. We're going to keep our
thank you, Josh.
Let's just keep doing these every couple of weeks because the situation is obviously very fluid, and it's going to be interesting to see how these things play out. But I think diligence is key, and hopefully the people that are watching this that are either familiar with you or wanting to get familiar with you and potentially me understand that we are very diligent in watching these things. So that's it, man. Thank you very much.
Thanks, Josh.
All right. Thank you all for joining us. Have a great weekend. Weather's great down here on the Gulf, by the way.
It is. We're at the beach now, and it's beautiful.
Yep. I'll see you Saturday.
All right. Bye-bye.